Hey, welcome back. Something big just flipped. Visa's turning banks into blockchain players. Chainlink's powering $240 billion worth of tokenized real estate. And Circle just plugged Europe's banking system straight into crypto rails. Now, at this, major G7 macro data this week could be the golden spark that pushes Bitcoin and real assets to their next breakout zone. Are you watching it happen or positioning for it? Visa has launched a pilot program to help global banks test tokenized asset issuance and smart contract automation, directly integrating with enterprise blockchain infrastructure partners. Now, what's the significance of this announcement? Because Visa's program bridges banks with real asset tokenization, reducing settlement friction for on-chain bonds and funds. Now, it helps to transform Visa from becoming just merely a payment processor into a genuine tokenization infrastructure layer, a massive signal that RWAs are becoming part of the global payments rails. With 15 plus major banks already in the sandbox testing phase, this positions Visa as the compliance wrapper around institutional blockchain adoption. So this is very interesting, and I would expect Visa's competitors and other SWIFT-like operators to be part of this real-world asset tokenization bandwagon, because if they don't, they will just simply be left out to die in the wind. It's inevitable, I think. So we're going to be expecting to see MasterCard, American Express and other competitors in the credit payment markets. So the next article here is around Chainlink is partnering with Balcony to tokenize a $240 billion US commercial real estate pipeline using its CCIP and proof of reserve for data transparency. Because Balcony's is already a SEC compliant platform that currently uses already Chainlink to help verify property valuation data, loans performance and fractional ownership. Chainlink's Oracle infrastructure becomes the audit trail for on-chain property data, which acts like a direct bridge between real estate, lending and DeFi. So for investors, it's proof that RWAs aren't a niche anymore. They're the new financial data layer underpinning trillions of dollars worth intangible assets. Now, I have explained why oracles exist and why Chainlink, for me, is the father of all oracles in the blockchain space. Why do we need oracles? It's because, as I've explained in several videos, the blockchain systems natively lack the real-life data from the physical analog world that we live in, right? It just doesn't understand what we mean by real estate property valuations or price data. And likewise, it doesn't understand the forex currency rate between USD and Euro. It doesn't understand what it is or what it's talking about, right? So in order to plug that gap natively on these blockchain systems is why we need oracles. And Chainlink is the leader by far in the oracle space. So it's such an important and pivotal RWA coin project. So this article is really clear that it's taking Chainlink and embedding it into the TradeFi space in order to bring in, as it says here before, the real life property valuations data, but not just that, but also other important data linked with real estate. And certainly Chainlink is going to have such a buoyant future because there's going to be a growing dependence on Chainlink. And of course, there may be some smaller, newer players like Pyth that may be capitalizing this market gap, right? This need from the market to provide oracle data into any blockchain system. So it's such an important area. And right, this next one is around UK-based Clearbank has joined the Circle Payments Network, expanding access to MiCA-compliant euro and dollar stablecoins across Europe. So this move effectively ties regulated banks to Circle's on-chain settlement layer, combining EU banking compliance with USDC's blockchain liquidity. So that's the Circle stablecoin. It gives financial institutions a plug-and-play on-ramp to stablecoin payments under MiCA rules. they're becoming the backbone of cross-border banking and treasury operations. Now, again, I've explained several episodes on the differences between what is a central bank digital currency, the CBDCs, and stablecoins, and indeed hard assets like Bitcoin. So stablecoins are such an important area to bring in TradeFi wealth on rails, right? And then that can be used to invest in other real asset tokens. That's why it's such an important mechanism to pour in that wealth onto the blockchain. Also, it serves as a useful indicator. So it's like a double-edged sword, the stablecoins. And why Circle is making such an amount of noise? Well, we know that there are a lot of private issuers out there. So those firms that are issuing stablecoins that are actually pegged to the underlying fiat currency. So in the case of the USDC, which is Circle's stablecoin, it's currently pegged on a 1-on-1 ratio to the underlying fiat US dollar. But it's not just the USDC. That's the only stablecoin that is pegged to the US dollar. We have several others out there. So the main competitor is Tether, which is USDT. That is the leader. And in second place, it's the Circle's USDC stablecoin. So it's clearly not a surprise at all to see these sort of announcements, because Circle is trying to do everything that it can to capitalize on the recently approved US Genius Act, which is the piece of legislation in the US that governs how these private issuing firms issue stablecoins. But also in Europe, we have MiCA. So this is the umbrella piece of legislation that covers everything to do with crypto, not just on the Genius Act in the States in terms of how it manages stablecoins. It also already has rules to manage the rest of the real asset tokens in Europe. So this is a logical next step for Circle to start partnering and working with other TradeFi players in the financial sector, whether we're talking about banks or other payments network providers out there in the Eurozone region. And again, this would just simply add to the momentum. So very good news all round. And then lastly, I'm going to share with you some of the macro data that I want to bring to your attention that is going on this week. Now, this table shows you there are a heap of central bank monetary committee meetings taking place. There are also some macroeconomic data around inflation. So there's inflation data reports and consumer confidence. So these are the three buckets of economic data that we should be expected to see during the course of this week. So we've got the Fed interest rate that should take place in Wednesday this week, October 29th. So what's the expectation there is, given the added pressure on Powell to reduce the interest rate, there's growing added pressure to reduce by a quarter point from the current rate of 4.25 to 4%. So it's going to be a 25 basis point anticipated rate cut. But maybe it could be a half a point. We don't know. But certainly the expectation for the market as a whole is for the interest rate at the Fed to reduce in this week's meeting. So we've got that happening. Also, similarly, on the same day, we've got the Bank of Japan to reach its rate decision. The expectation from that is to not reduce the rate and stick with its 0.5 or 50 basis points fund rate. And then the ECB are going to be making a similar Monetary Policy Committee rate decision. And this is on Thursday, October 30th. And then on Friday, we've got the price index. So this is the inflation reports coming out from Europe and the US later this week. This is going to be good news for institutions and mid-tier cap, small cap companies to be able to borrow at a cheaper rate. If these expectations were to be fulfilled, we should see more borrowing happening. And whenever there is more money being borrowed at a cheaper rate, well, this is going to be a good signal to reinvest that into assets. There are greater rate of return. So for me, this is Bitcoin and real assets. So this is what I would expect to happen. But like I said, this is just what I'm anticipating that will happen. We just need to wait towards the end of the week to verify if that is the case. But like I said, as a general rule of thumb, whenever there is rate cuts, we should use that as an opportunity to add to our existing positions and certainly not to sell off. Remember, I've always advocated against panic selling. and always maintain a long time horizon whenever you're engaged in these financial investment decisions, whether it's crypto or equities and stocks. So please tap into my midweek specials and my Friday desk reviews impacting Bitcoin and real assets. That's all I have for you for today. If you value clarity on Bitcoin, blockchain technology, and real assets tokenization, stay alert. Subscribe and enable all notifications to stay ahead of the curve. Share this episode with those who need to understand what's coming, friends, family, and colleagues. This channel aims to deliver insight, no noise, and no hype. Subscribe now.